All right. Well, I am very excited. Today, I have KJ Mudd with me. My name is Bridget, and I am excited to talk multifamily. KJ and I have interacted in the past, and I've been on her podcast, gone live, or not podcast, actually. We did a Facebook Live, and that was a lot of fun with some other areas that we could touch on as it relates to just us as individuals and how we can, of course, be the best version of ourselves and what we can bring, especially in real estate investing. And so I'm very excited because KJ has that knowledge within the multifamily area as it pertains to real estate investing. And so looking forward to our dialogue and discussion today. KJ, thank you for taking time aside from all of your business, and not only that, just your family and all the other important things in your life. So thank you very much for joining today.
Thank you for having me. I'm really excited to discuss multifamily. It's something that I'm really passionate about and enjoy doing. So any way that I can share knowledge and show others a way that they can also do it as well, I'm more than happy to do that.
Well, I greatly appreciate it, and I'm very eager to learn as well, and can't wait to dive in. So why don't we talk a little bit about, your background, what led you to real estate investing, and kind of a bit of your journey. That would be really fun to learn.
Okay. I think growing up, I always knew, I always kind of had like an entrepreneur spirit of not really liking a 9-to-5 or having a boss. I always wanted financial freedom. I always wanted the unattainable, something that seemed so impossible. And when COVID happened, it was kind of our opportunity, because both my husband and I, we lost our jobs, and we were living in an apartment, and we couldn't pay our bills because our jobs were dependent on being able to go to work, and there was no work. So that's when we took it upon ourselves to learn. We were like, we don't want a situation like this again to have control over us. So we spent all day, every day watching YouTube videos, learning, how do I get into real estate? How do I get rich? What is the secret sauce to this? It can't be that difficult. How are people doing this? So we learned how to wholesale, or we understood the concept from YouTube. We were like, okay, we get it, but how do we do it? So we seeked out some mentors. We actually ended up paying $5,000 to 2 mentors here in Houston, where we live. And we spent our stimulus check. So the money we got from the government, we spent it on there. We actually had $97 left in our bank account. And we went all in. We put our backs against the walls, and we were like, we're going to figure this out, because we don't, I feel like when you put yourself in a situation where you have no other option but to succeed, and there's no plan B, you end up succeeding. So that's what we did. And we did a whole month of training and learning, and then a month later we closed our first deal and made $22.5K. So we quadrupled our investment.
That's a great return on investment.
Yes, powerful. That was a very powerful moment internally, to see that I was able to do something that I didn't think was possible, or that I could do. Is probably the most money I ever made in my life. It was really crazy to bring that check home and show my parents and say, I did that. You thought I wasn't going to be able to do it. You thought it was another thing that I was doing, and I did it. And it felt really rewarding. It was probably the best thing I ever did.
That's such a great story, right? Just for everyone to hear that you can be successful. And what I know about you and your husband, which I love, is that, there's that take action spirit, that we're just going to go and do it, right? And I love that, because for those that kind of sit there and who may be watching this and think, well, can I do this? But I think a big contributing factor is the go take action part of, of just making anything that you want happen, right?
It's funny. I think activator is number 6 or 7 on my top 10.
Yeah. Yeah. And it's exactly what an activator will naturally want to just take action. They may not even have all the information, and that's okay, right? You don't need all the information because it can actually hold you back if you're waiting to have success, right? Because you're just not ready to do. So yeah, activating and being able to, just run with it is a great attribute to bring, when you're especially in an entrepreneurial type of environment, right? Just go do. So
yeah, that tends to be me. I'm always like, oh, let's try this, let's do that, let's do this. And Joseph's like, hold on, let's make sure like we have our ducks in a row.
And now that's a wonderful balance, right? Because you've got somebody who is going to say, wait, okay, let me make sure this is, okay. And then, but yet you're like, no, look, full speed. Let's go. Let's keep moving, which is great because you have balance in that, which is, that's wonderful. Well, one of the areas that I had, when it came to real estate investing had shown interest in was multifamily. And that's where I think many of us, when we start in real estate investing, right, you start to think like, oh, well, where do I see myself? How can I be successful? And so initially I thought, multifamily. And as we have learned, and many of us encounter, is that there's this shiny syndrome, right? Where you kind of get like, oh, there's these other things. And so kind of went down a path of single family versus really focusing on multifamily. So I'm really excited to hear more about multifamily because this is really where I think it's very powerful to understand and learn. So, but from a generational wealth, could we talk a little bit about a bit of that as well as it pertains to multifamily? And
I think when it comes to that, you're planting seeds and you're not going to see the growth of those seeds for quite some time. I think we own 3 properties, over 108 units. And we're not going to see like the true benefit of having bought these properties until 5 years from now. So it can be difficult for those who want instant gratification, especially being an entrepreneur. You have to really learn that you're going to work, and you may not know how long or when you're going to see the results of your actions. And going from the 9-to-5 mindset, paycheck to paycheck, and having that stability and the comfort to, I don't know when I'm going to get paid, and I need to take action every single day. And the work that I'm taking, I'm not, oh, I work this many hours, this is how much I'm getting paid. It doesn't work like that. So it was a huge shift going from, I'm comfortable, I can hang out on the weekends, I can do whatever I want in the evenings, to like, we need to maximize our time. We need to make sure we're talking to people. We need to make sure we're doing what we need to do, because if we don't get paid. And so shifting that from 9-to-5 to real estate, we weren't so successful in the single family, and we always wanted to go into the multifamily, and it felt so unattainable. I was like, how are we going to buy an apartment building? Millions of dollars. How are we going to do that? It was just like a mindset shift that we needed to make, that it's just extra zeros. And realizing that, hey, you're basically buying a business, and you're going to be operating it and fixing it up and making it better and increasing the income of the business. So learning that it's actually easier to get loans on a multifamily asset than it is a single family asset, because they are looking into the property itself. They are basing the value and their willingness to lend on the asset, not you as a person. So, well, there is instances where they do, but majority of the time, it's how is this asset going to perform? Is it stable? Can they be secure in lending you? So that was something that was really eye-opening. I was like, okay, so that's not so bad. And what really like shifted everything was realizing that if we stayed in single family, I I felt like, where's the end in sight? When are we going to reach that potential of feeling successful? And I couldn't see that in single family, and I always felt dragged down. I didn't want to work. But with multifamily, I was like, you can scale, because if you have 100 units and you raise the rent $25 on all of those units, that's a lot of money compared to like raising $25 on one single family house. You have one insurance company, one roof, one mailing address. You have one central spot that you can really maximize and scale to a different kind of level than you can with single family. And that's when I was like, wow.
And vacancies, right? I mean, if you have a single family and your vacancy, you're at you're 0%, right? Versus if you have multiple units and somebody vacates, you're still, able to generate cash flow, or at least, you're not completely at zero for vacancy.
Exactly. So it's a lot more stable, and I feel Joseph says it's like recession proof, because everybody always needs a place to live. So a lot of people like to invest their money in stocks, or they have their money in a 401k or an IRAs. And Joseph himself had a Roth IRA that lost 33%. And it's because these people that are in charge of them it's not their money. They're going to let it sit. They don't really have a priority to, let me make sure you're doing good with your money. They just want your money so they can make money with it. So Joseph and I were like, we need to be investing in stable assets. We need to be investing in something that can really build us wealth and bring us a good return. And buying assets like multifamily apartment buildings is one of the safest things you can do. You get the benefits of tax depreciation. You get, quarterly distributions where you're getting cash flow. And then when we end up selling the property, you get the whatever the sale price is, the extra that we make from it based on how much you invest. So it's a lot safer to park your money in something like that than it is to go put it in a volatile stock market that could go up or down any day. So that's where we've really found a joy with the multifamily apartments, is being able to educate others about the beautiful thing about making money with apartment buildings, because they didn't teach us this in school. I don't think a lot of people really know that there's an opportunity to do something like this. And I feel like people are missing out on opportunities because they just don't know. So I like to educate and preach and share about the opportunities. If you can find operators that you believe and trust in, you should invest with them. It's a great way to put your money to work versus it sitting in the bank, and now the bank's lending your money for, I don't know, like 15%, and you're making nothing on it.
Yeah.
Like, I want to make money on my own money. Let me put it somewhere where it's useful. So
do you also capital raise then for the investments that you're looking for in the future, and what does that look like?
Yes, Joseph and I both focus on raising capital. That's kind of our forte, what we want to focus on. When you're in the multifamily space, it's a team sport, so you actually don't need to know how to do everything. I'm not good at underwriting, and I don't plan to be good at underwriting. Joseph does that. And there's people who are good at asset management, people are good at property management, whatever it is. You already need to focus on one thing. And Joseph and I realized that we're good at building relationships with people. People like and trust us, and we enjoy like making friends. Like my number 3 is woo. So, and
winning others over.
And so we enjoy raising capital, and we're good at it. So we were like, you know what? Let's get good at this one thing, and then be able to insert ourselves into other people's deals by bringing the capital. So that is one way that you can get into deals and own equity of a deal and be part of the GP by raising capital. So we like to provide opportunities to our investors or people that we meet about, hey, look, here's an opportunity you can invest here. Here's an opportunity you can invest here. So that is actually something that we recently discovered that we should focus on. We decided, operations is great and all, but we could probably find somebody that we can give a salary to run it for us, and then we oversee them or something like that. But we prefer to raise capital. That's what we enjoy doing.
Ah, got it. So for the audience, anybody listening, a GP is a
general partner.
Right.
So
and then
they're the ones who run the deal. They operate the apartment building. And then there's LPs, which are limited partners, which would be somebody who wants to invest passively. So they're going to own equity in the deal, but they don't have control over the property. They aren't operating the property. They are literally just putting their money in and wanting to get a return. So typically LPs make good money. We did a 70-30 split, so 30% goes to the GPs, 70% goes to the LPs. So depending on the total raise that we're looking for, depending on how much you put in proportion to the total, it would be the equity that you get. So it's pretty awesome. It's a great way to invest passively, make money passively without having to know how to do it all.
Yeah, and I think I've heard that there's additional, like from a tax strategy. I don't know if that also impacts the passive investor with, kind of having this asset as well. Does that also give that LP that same kind of?
Yes, tax. Yeah, you get tax benefits. You get the appreciation and you get to write off the depreciation. We do a cost segregation, which we actually did this morning on one of our properties, where we're trying to get as much write-offs as we can, so that way the LPs and actually everybody on the team can benefit from it. So there's a lot of upsides to investing. Obviously, you always want to talk to your CPA and your lawyer and everyone else. We're not financial advisors. So we always say, make sure you talk to those that you trust in for advice. But investing always comes with a risk, but this is a very low risk tolerance sector to invest in.
Right. Yeah, that's great. And that was one of my questions about the passive and active investor in multifamily, which you've done a great job of explaining and helping, those to understand. You don't have to take the ball and run with it, from A to Z, right? It can be that passive investor who puts in the capital, right? Are there basically just those two kind of roles? It's either the operational side or the capital side. Is there anything else then when it comes to multifamily that?
So I guess the whole process of acquiring the deal is a long process. A deal that we recently closed on was a 9-month process of being under contract. So the due diligence is, you're paying up front for attorneys, you're paying up front for, what is it called? To get all the inspections done. And then you're paying to have the attorneys, like for instance, we went back and forth nonstop with the contract. So that costs money every time we do that, trying to come to an agreement. And on top of that, you don't know if for some reason we weren't able to raise all the money and couldn't close, well, now we lose all of that money. So there's a I don't know what you call it. There's a position in the GP table where you can be, what is it? My brain today, I woke up at 4 a.m. to go work out and I haven't napped. So my brain is not. You can be risk capital. So risk capital is the person who brings the capital for all of those expenses that I was mentioning. So you can earn equity in a deal for bringing the risk capital. The only downside is if something were to happen, you lose that money. So it's very important that if you are doing the risk capital, that you really trust and like the people that you're investing in. And a lesson that I learned is make sure that everybody on the GP table, especially those that are supposed to be raising capital that you're depending on, invest money of their own as well. Because I think when people don't have skin in the game, they don't take it as serious. And when the going gets tough, they can just get up and leave and they have nothing to lose, but the risk capital person does. And you can get put in a bind. So it's very important to make sure that the people that you're bringing on, you've vetted, because you think you know someone until the going gets tough and then you see true colors. And so it's very important to make sure everybody has skin in the game and they understand the commitment that it takes to run a multifamily apartment building, because it is not easy. It is a lot of work, but it's rewarding and it's worth it.
Yeah. So when you have, like you were sharing, multiple, like you mentioned, having 3, right? And that you're planting the seed today. So you're juggling essentially 3 of these like major projects, let's call them, right? At the same time, and keeping all the balls juggling, right? What does that look like for a team? Because like you said, it's a team sport. So you've got to have a lot of different players on the team. What does that look like?
Sometimes I feel like it's deal merge where like I'm getting the properties mixed up about what's going on where. Which is funny. I was like, wait a minute, which property are we talking about today? The first one we're not as involved with because it was our first one. We pretty much didn't give very much equity in it. We partnered with Pace on that one. And it's a deal that had like over $1 million in CapEx. It was a really heavy lift. And so we've kind of just been like eyes on the wall, ears on the wall, whatever you say it. Mm-hmm. We've just been learning from that. And then the second deal that we had, we were a lot more involved. And this second one we had an experience with a pretty bad property management company. So we've learned how important a property management company is for running an operation for your multifamily apartment, because they make or break you. They are the lifeline, I feel like, of your operation, because they're going to be the ones making sure the property is doing well, making sure the tenants are paying, making sure it's getting leased up, and that you're not going to be, 50% occupied and them not taking effort to lease it up. So not only are the GPs, the people that you choose to be on your team are important, but so are the people that you hire, like the property management company. So working as a team, we have a WhatsApp group, and we all constantly are in conversation with each other. What's going on? We have weekly meetings where we get on and we're like, okay, what needs to be done next? Who do we need to talk to? We kind of just make sure we stay on the same page to make sure everything's going well. So that's kind of how we work as a team doing it. We have different roles assigned to different people, and that's how you decide who gets what equity. And you decide that before the property closes. We're like, okay, let's sit down and negotiate who's doing what and what equity do they deserve for doing that. So that's kind of how you decide who does what and how you get paid. And then from there, once the property closes, then it's take action and execute the business plan.
Yeah. And there are so many different, the research that I've done, right, and understanding that you've got all these different players that, everything from the lawyers, right, to adjusters to, there's all these different players on the team, and coordinating all of that along with operating, each of them. So you said something a moment ago about a lesson learned. Is there anything that outside of that lesson, or additionally, that you walked away going, oh my goodness, if I knew this when I first started, it would have saved me, some time or stress, right? Less stress. Anything else that you can think of?
I think taking the Clifton strengths test was super eye-opening. I think having our partners take that would have been a game changer, so you can understand why they do what they do or who should be plugged in and where, so you're not operating in the wrong spot. And I think having more upfront contracts with the people that we're working with and understanding your worth, and not because I'm new, I'm just going to give up everything. Because we did that on our second deal, and the person that was supposed to be teaching us and holding our hand pretty much never showed up. And so we were like, wow, you own the majority of this property and we're doing all the work and you're nowhere to be seen, until things get tough. And now here you are blaming all of us. So,
Yeah. And a little tip that I could give for everybody, high responsibility. You may want, when you're looking at the strengths that people bring, high responsibility is somebody who says what they're going to do and they do it. They feel like they've said it, they're going to do this. So somebody with high responsibility, when I'm looking over somebody's strengths, I know if they say they're going to do something, they're going to do it. They own it, right? Which is a really, pretty key component, right, to when you want to work with somebody, because they're going to say their part and they're going to stick to their part and probably do even more. That's what I have found, those and have high responsibility. And something that I've got to share, I know in UKJ, I've seen that high communication just come natural, right? And that sits really high up for you, which is important in any venture, right? Any project, any kind of work environment, or just in life, it serves you very well. So, it's great to hear you share those things. For the audience who may or may not know, I'm a strengths coach, a Gallup strengths coach. And so kind of understanding the 34 themes. And, it's been fun to see KJ and her husband, Joseph, really understand their strengths and what they bring. And then just as a partnership together, how powerful they are because of knowing where their strengths are. So that's a really kind of fun way to understand each other and maybe create less barriers, be able to communicate and have some language around it, which is fun. So KG, how could, if somebody's looking to passively invest and they want to, reach out to you and your team, what are some ways for them to get a hold of you or be able to work with you?
My Instagram is at KJ Munn. That's probably the best way to get a hold of me. We also have a YouTube channel if you guys want to check out our YouTube channel. We like to post a lot about ourselves as like a couple in business, as a family having a newborn, and then doing multifamily. So we kind of just show all around how we operate and who we are. And we also have content on there about multifamily, questions you might have, things you should look for when looking at deals and things like that. So we're trying to work better on our YouTube channel. And then we have a Facebook group too called the $1 Million Upside, where we created a community of like-minded individuals who are interested in multifamily and find people to team up with or do deals with. So that's what we have.
That's great. Well, I'm glad that we could have you on today, and I appreciate the knowledge that you share, because it's the long game, right? This is not, like you share, it's not going to be something that happens quick. And I think from a mindset perspective, right, having the right people around you, being, in an environment that continues to reinforce that you can be successful, you've got to be persistent, you can't give up, and it's the long haul. It's when you think about like a runner, right? It's the long haul. You can't sprint it. There's no way to sprint it and find success. But we appreciate having you join to share your insights and the nuggets that you've shared. And I hope to be able to help others find you and your team so that they can do some passive investing and be successful in and have some generational wealth for their families. So thank you very much.
Thank you for having me, Bridget.
Yeah, you have a great one, and take care with the family. Love to see all that content of just who you and Joseph are, your family as you're raising Skylar, which has been exciting to see. So I appreciate having you on today.